Good morning, everybody. It's Tuesday, July 2nd, 5:25 a.m. Central Time. Grain markets are mixed this morning. December corn futures up 2 1/4 at 422 3/4. November soybeans up 7 1/4 at 1118 1/4. December Chicago wheat down 5 1/2 at 607. December Kansas City wheat down 6 1/2 at 608 3/4. December spring wheat up 3/4 cent at 651 1/2. Let's start off with some demand news.
China is slated to import a record amount of soybeans this month. The expected increase is due to reduced soybean prices. Some analysts believe that a possible Trump presidency has also spurred stronger U.S. imports. If Trump is elected president, U.S. tariffs could rise, potentially sparking a trade war. A trade war, however, would have little impact on China given the reduction in market share for U.S. soybeans. The U.S. market share declined after Trump imposed tariffs during his first presidency. Cheaper Brazilian soybeans have also had a detrimental impact on market share.
I believe this is the first time I've seen it discussed or reported in the major news wires that China's worried about Trump as it relates to soybeans in particular, which is interesting. So China, the most of the soybeans that they're importing this month, I believe, will be from Brazil. We don't export or ship. We don't ship a lot of soybeans during the month of July. Our prime time shipping season for beans is immediately post-harvest, like those 3 or 4 months. The trade war was a bad deal for the soybean market. There was a stretch there of a couple of years where China just didn't buy much from the U.S. and their purchases overall went down during that same time frame. You got to remember that the trade war happened at the same time that China had African swine fever in its hog herd, so they just didn't need to buy the quantities that they would have typically bought. So the trade war, to some degree, came at a good time for China, I guess, if you want to think about it that way. So I don't know. Is China actually worried about a Trump presidency? I don't know. I mean, I think the statistic that Reuters had here, and I think this is correct, Brazil accounted for 70% of China's soybean imports last year. The U.S. share was only 24%. And those numbers are going to get even more lopsided, assuming Brazil doesn't run into some big time crop issue. So could this be a short-term positive for the soybean market? I don't know. We've seen some smaller export sales for old crop. China still hasn't bought a single cargo of new crop U.S. soybeans. I guess this would be an issue if I'm China, but Brazil is my bread and butter now. So I don't know if it's at the top of my list, but that's still a big chunk. I mean, if it's 24%, I mean, it's worth considering. So do they want to get stuff on the books or shipped before Trump gets elected? Maybe. And the other thought that I had was that, the inauguration is in January. So we could technically, China, I suppose, could buy and import U.S. beans before inauguration. Maybe there could be retroactive tariffs. I don't know how all that works, but interesting stuff nevertheless.
Mexico will scrap its plan to reduce yellow corn imports. The country is also planning to ditch its goal of becoming self-sufficient in grain production, according to the incoming head of the Ag Ministry. Instead, Mexico will focus on maintaining self-sufficiency in white corn. The country also has the goal of reducing deforestation by half during this new administration's 6-year term. The outgoing administration aimed to cut yellow corn imports to limit the use of genetically modified corn. The plan caused a trade dispute with the U.S., which supplies the majority of Mexico's yellow corn.
Mexico was our largest corn buyer, or has been this year by a wide margin. Mexico has accounted for 40% of all U.S. corn export sales. So they're more than double Japan, who was the second U.S. corn buyer, or second top U.S. corn buyer. I think there was some not misinformation, but I think people misunderstood this. Mexico never stopped buying U.S. corn. There was a moment, and I think there still are some issues with GMO corn for human consumption. I know they wanted to avoid that. I'm not sure exactly where that's at, but that's a very, very small percentage of exports. So Mexico is going to stick around. We need them, and it would be great if they increased exports, because we're not seeing it from China. China's the one that could come in and really move the needle here, but they just have not.
So if you guys have not checked out our premium content, you need to do so. You will not find content like this anywhere else. Joe, can you tell me about yesterday's premium video?
So many questions and issues surrounding the USDA report, among other things. Pete was on yesterday. We did 38 minutes of uncut analysis, conversation about not only the USDA report, the supply and demand issues facing the markets. The title of the video was "You Were Focused on the Wrong Stuff." And I think to some extent, yeah, the farmer and just in general, I think people are focused on the wrong stuff when it comes to the market and why the market is doing what it's doing. There are some issues that are not discussed on social media as much, not discussed in the news wires that Pete addressed that I think were really, really good. This is really must watch stuff. I think that the understanding of the dynamics in the market right now is not that great. I think there's a little bit too much focus on the supply side and what about the flooding in the Western Corn Belt? Yeah, that matters, but there's bigger issues here. Go to standardgrain.com, sign up this morning. I'll send you a copy of that video. It's 38 minutes uncut with Pete. There's no commercials, nothing like that. That's the whole idea behind the premium sub. We can do this one of two ways. We can do the ad route. We're running an ad right now, right? Because it's free because you guys aren't paying for this. And the premium stuff, there's no ads. It's all totally uncut, uninterrupted because it's a premium subscription that the farmer pays for, basically. Our crowd pays for it. And that's why there's no interruptions, nothing like that. And that's why there's no conflict of interest. We have no corporate backing. We have no companies behind this. We can say what we want to say. $50 a month, cancel at any time, no other fee, no other obligation. Nobody will try to sell you anything else. Sign up this morning. I'll forward you a copy of this morning's email, which includes that video with Pete, along with a whole bunch of other stuff. Check that out today.
U.S. corn conditions declined slightly last week. The crop was rated 67% good to excellent nationally as of Sunday versus 69% last week. The rating was slightly lower than the trade expectation of 68%, but was the best for the week since 2020. Notably, conditions improved in Illinois, Indiana, Michigan, Missouri, North Dakota, Ohio, and South Dakota. 9% of the crop is rated poor to very poor, up from 7% last week. U.S. soybean conditions were reported at 67% good to excellent nationally as of Sunday, steady with the prior week and the best for the week since 2020. Several states across the Corn Belt saw conditions decline, including Iowa, Michigan, Minnesota, Nebraska, and Wisconsin. 8% of the crop is rated poor to very poor, unchanged from the previous week.
So you had a 4% decline in Iowa. They went from 77% good to excellent corn down to 73. Minnesota went 65 down to 62. Wisconsin went 65 down to 61. So you only saw the ratings drop one because you saw improvements elsewhere. When you look at the seasonals of corn ratings, good to excellent, we're above average. And yeah, there's a couple of years in there that were bad to throw off the average. But this rating, 67% good to excellent in corn, definitely leaves the statistically leaves the idea of a trend yield on the table. Same thing for soybeans. You're 67% good to excellent, leaves the idea of a trend yield on the table. And that's why the market has been so unexciting. What about winter wheat?
So winter wheat harvest is ahead of schedule. The crop was 54% harvested nationally through Sunday versus 40% the prior week and 39% on average. The crop is 80% harvested in Kansas, 87% in Texas, and harvest is complete in Oklahoma. No progress has been reported in Idaho, Montana, Oregon, South Dakota, or Washington. Winter wheat conditions declined to 51% good to excellent versus 52% a week ago. The U.S. spring wheat crop was rated 72% good to excellent nationally compared to 71% last week.
Nothing exciting here. Winter wheat harvest is moving quickly. Spring wheat conditions are still very good. There's nothing to write home about. When I said the ratings are not exciting, what I meant is that the whole situation sucks and that it's not fun to deal with. That's what I meant to say.
Early morning rain pushed across portions of Iowa, Minnesota, and Wisconsin. The forecast continues to offer widespread Corn Belt rainfall during the next 10 days. There is some divergence between the Euro and GFS this morning. The GFS leaves the eastern Corn Belt drier during the 5 to 10 day period, while the Euro offers more generalized rainfall. Below normal temperatures will continue in the northern and central U.S. plains during the next 5 days, whereas the eastern Corn Belt will be slightly warmer than normal.
With regard to weather and markets, this is one of the least exciting summers I can remember in my career, maybe the least exciting. I mean, we've had no real crop scare. We've had no real big shift in the forecast where we go from dry to wet or vice versa. The forecast is just offered consistent and generalized rainfall. And I know not everybody's caught the rain. I know some areas are dry, but this forecast is benign to bearish is what it is. And you're running out of time now for your typical seasonal crop scare event. Oh my gosh, it's going to be hot and dry for 2 weeks. I mean, it's July 2nd. We're looking at a forecast that's 10 days out. These forecasts change several times per day. you could see a shift toward that, but it's been pretty consistent in the rainfall that has been offered. You got rains on the radar this morning. There's just nothing good here.
U.S. corn shipments declined last week. USDA reported that 32 million bushels of corn were inspected for export during the week ending June 27th. The print was down 29% from the previous week, but up 21% compared to the same week last year. Soybean shipments declined versus the prior week at 11 million bushels. The print was down 13% compared to the prior week, but up 15% versus the same week last year. Wheat shipments declined compared to the previous week at 11 million bushels. The print was down 10% from the previous week and down 9% versus the same week last year.
Off a little bit from last week across the board. There's nothing bad here. Only got 2 months left of the marketing year for corn and soybeans. We're going to hit the USDA targets or be very, very close. So I'm not, I don't have any degree of concern either way when it comes to shipments. Cattle were off a little bit yesterday.
They sure were. Feeders were an average of 205 lower. Live cattle were an average of 87 cents lower. Box beef surged to record highs for the year yesterday. Choice ended the day at 329.18. That was up 286, and select ended the day at 306.41. That was up $1.91.
Outside market's pretty quiet. U.S. dollar is up a little bit. Stocks are off. The S&P's down 22. Dow's down 120. Bonds up a little bit. Crude oil is up 66 cents in the August WTI. Kind of creeping back here as of late. 84.04 last trade. Have a great day, guys. We'll talk to you Wednesday.